Hey everybody, it's Kemosabe here, bringing you a little video update. Just playing around with charts here and looking at cycles and thinking, is the low in or do we have lower to go? And I can make an argument for the low is in and you should be looking for buy setups. What I have here is the 2018 to 2021 cycle, marked out at the low with the corner of this green box and matching the top corner with the 2022 cycle low. And interesting how price kind of follows along and meets up, kind of time meeting price. So price goes up, kind of gets overextended there. You can see how the 2019 peak matching from that cycle low, that would equate to getting that high. So definitely overperformed there. I think that was a 3 or 4x in a very short period of time, and then price did the correction down. So let's continue with the price action. So here's where price action met up. We're meeting there with right there, and then of course the drop with the deviation low, breaking below, and then coming back up, finding support, and then breaking out and back testing. And what I find interesting is how time is meeting price. So right as your parabolic advance started, right there, this is meeting the same area in the cycle and in the trend. It's that much higher starting point, and the parabola came thereafter. Will we get a parabola from here? Maybe. I'm definitely going to try to trade long. I definitely want to look for buy setups as long as the weekly is closing higher highs and higher lows here. But interesting data nonetheless. So if price was to continue a parabola and just mimic that 2021 price action, which I don't think we have the gas to do that, but maybe, then that peak would equate to a 2025, March 24th of 2025 would be some time to look for a peak. How high is that peak? Well, maybe if time meets price, you get up here in the 300,000 range. I think that would be parabolic enough to go that far in 6 months. I think that's a little too far too fast, but it's within the realm of possibility. You could also potentially continue the cycle and have another peak, or just do a deviation somehow of what happened in 2021 and peak out in October of 2025 and match that channel. You'd have a price target of 323,000 sometime in October there. Now that would just be Bitcoin doing its cycle, just keeping with the same cycle, and then everybody knows to exit at the end of the cycle. Don't know how the market makers are going to pull that off, but anything is possible. So also with regards to this little maneuver, we could say that's just one data point, but we could go back to the previous cycle and do the same thing where we have the cycle low matched with the cycle low here, and just run the price action and see what happened. If I can get it to move. There we go. So price came down, came back up, and then sideways choppy consolidation, breakout, back test before starting the bull move. Starting your parabola, just like in 2021, starting the parabola. So we have another data point that suggests that you should be looking for buy setups as long as that low is maintained. Also assuming that Bitcoin continues to do cycle things. So how far up did this one go? Let's just run it to its extremity, matching there. Look at 2021 fell short of the ultimate high target. It came not even halfway up this box to match price action. So if we were to mimic from the previous peak and only get, not even halfway up the box, 120, 124,000, 120, 115, somewhere in that range would make sense if price action is to repeat and measure in some manner similarly. Let's take some measurements of the potential diminishing returns idea. I want to take a trend-based fib extension from the cycle low in 2014 to the 2020 or 2017 peak and project from the lows. You can see price reached the 618 of that extension. So what if we were to measure our 2020 and 2021 rally and project to the 618? That gets you a target of close to 99,999. So maybe it dances around there a little bit or falls short, and you have the diminishing returns. And then you have an end of sequence, which would be 1, 2, 3, 4, and 5. And that's all you get. Quite possible. Something to be prepared for sure. You probably have divergences happening at that point, and this would end up being distribution. There's your upthrust, and then you maybe come back down and touch the support or demand line going up. But that's later on in the future. Next cycle, potentially. We will see. You also have the potential for wave 5 just extending like crazy. That's still on the target. You would have the same extension as 2021's rally, getting up somewhere in the 300,000, reaching the top of the channel. That works. If we take a trend-based fib extension, not the retracement, the trend-based fib extension, measure from 1 to 3, project from the bottom of 4, get you in the wave 5, an extended wave 5, very parabolic up in that area. So that would be at the 100 fib extension to the 1272. Like I said, very parabolic. And given the right circumstances, yeah, it's possible. I think it would be very painful. Something is going to break if that happens. But let's zoom into lower time frames and see if we can find some setups. Getting down on the 4-hour chart, we're looking at our low at 49,000 that I don't think gets broken. Wouldn't make sense at this point given the data that I presented earlier. And we have higher highs and higher lows going on. This could be your higher low, and you're going to continue pushing. Currently, I'm seeing this as a potential completed move. I would like to get one more push up just to grab liquidity. That would be ideal. That would be more bullish, in fact. Because if it wants to move up, what's going to have to happen is the market maker has to grab those orders, push them down, so that it can continue to the upside. Now, that doesn't have to happen. Right now we have this double top. For me, double top equals liquidity. Those are where stop losses are going to be, and the market maker uses those to push price. So if price does come down here, back test this area, it might go break out and grab that. But as soon as some of these liquidities start getting taken, it might start to get very volatile, and you may have some sharp pullbacks and then slow resumption back up. Sharp pullbacks, resumption back up, sharp pullback. Generally, that's the market maker and or the whales that are trying to shake you out before moving into markup phase. They want you to buy much higher. So they want you out of the market as much as possible. If they have to bring price down here to get you out, that's what they're going to do. But currently you have the structure like this, where you have a higher high. So now I'm looking for a higher low in this area, maybe taking out that liquidity, but it might only get down to this area. That would actually be very bullish. If you start seeing some accumulation a little higher up, look for a swing failure locally and take the price up. Put your stop loss down there. Something that's not Elliott wave per se, but if this is a completed move, we may be repeating this leg down here. And then repeat this, go for a bounce, back up to the highs again. And then repeat this leg down, getting right to the demand line where we found support before. So you can call that some kind of W, X, and then Y correction. And that would be nasty to make that last all the way until just into November. But possible. Might be a good setup where it barely takes out these lows. And that would be some kind of wave 1. That's your wave 2. And then it's up only for a month or 2 or 4 or more. But watch for the sharp pullbacks, back testing things. You might back test this line right here. Might be a sharp back test. And then slowly back up again. Watch for the sharp moves down to shake you out. This happens in the start of a markup phase. It's just getting the remaining supply. Anybody that is willing to sell or even enter short because of the impulses down. They're seeing impulses down, yet price is still moving on higher highs and higher lows. So pay attention to the closing prices and look for your buy setups. I would personally look for any grab of liquidity. If you grab this liquidity and you get a reaction, that becomes your stop loss. If you break that stop loss, you're likely going after these. And if you break that stop loss, you're likely going after these. So that would be the move down to 46 that I'm still interested in if it gets down there. If not, I have to continue buying the trend, which currently is this. Higher high into a higher low into a potential breakout. Might get a short squeeze over the weekend. It might be coming this coming weekend, maybe. We will see. Hopefully we'll have more price action to update during the week. Something a little more clear. A more pronounced setup, I guess you could say. Something to give high risk or high reward for very minimal risk. I'll try to update accordingly. Until then, have a good night. Keep your stops tight.